Hello everyone. Hope all of you are doing fine. The RBI announced its fifth consecutive hike in repo rate. Let me take you through the highlights of the same while we discuss the outlook for the month of December. Based on RBI's assessment of the macroeconomic situation and its outlook, the MPC voted in the ratio of 5:1 to increase the policy repo rate by 35 basis points to 6.25%. This was largely in line with market expectation. A majority of MPC also decided to remain focused on its stance of withdrawal of accommodation to ensure that inflation remains within the target range going forward, while supporting growth. Market participants who were expecting the RBI stance to turn neutral were disappointed, and this has resulted in a marginal uptick in bond yields. With this hike, RBI has hiked repo rate by 225 basis points from April 22 till date, and the overnight rates have moved up by about 300 basis points. The real GDP forecast for FY23 has been revised lower to 6.8 from 7% earlier. However, the RBI has highlighted that India will be one of the fastest growing major economies of the world for FY23. The RBI though indicated that the recent drop in global bond yields, commodities and dollar index could lead to the pace of these rate hikes softening further. Liquidity in the banking system is expected to remain tight. The spread of PSU bonds over the government securities are also tight. SDLs are offering better yields compared to AAA bonds. Now let's see rates and inflation from a global perspective. Even though inflation appears to have peaked out, the gap between inflation and the interest rates in the US seems high, which could lead the US Federal Reserve to raise rates to about 4.75 to 5% by the end of FY23. Interest rates are likely to remain high for a while before we start seeing a reduction, even though global markets have already started discounting a reduction in interest rates, as it's evident in the US 10-year bond yield, which is trading at 3.5%, down about 50 basis points over last month. Oil prices have eased to about $80 a barrel, offers a lot of comfort as it can help bring down inflation in India. Given that we are nearing the end of interest rate hike cycle, we suggest investors to increase duration of the investment portfolio and look at actively managed duration funds and target maturity funds. Thank you. Stay safe, stay invested.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.